should we buy or sell the Sweden ETF? So first off, read this disclaimer carefully and do your good deed of the day by liking and subscribing. So Sweden is in Northern Europe. We do have 1% move from the 52-week low. So we are minus 45% away from the 52-week highs, so definitively bear market. So here is the Sweden ETF weekly data points. So we have seen that for a long time, since the inception of this ETF, it's moved in time cycles. It has huge rallies, huge sell-offs. The time cycles have differed a bit in duration. The thing is that this market moves up and down nonetheless. So to have a major pullback in the Swedish stock market is completely to be expected. It can also happen in normal times, like between 2014 and 2016, the Swedish stock market had, a minus 33% bear market. It's just the way the cookie crumbles. So obviously there is a reason why we have seen the recent pullback. This week there's been a very dramatic escalation in the conflict in between, the bear and Ukraine, and broader, since NATO, the mobilization. That's obviously rather bearish. That's the primary reason. There's certainly been some things with interest rates as well, but the major event is that. You do see that we have fallen down to horizontal support. We just have. So technically speaking, we are at horizontal support. We haven't broken horizontal support yet. We do see that the market closed at the low of 2018, also 2016 here, late 2016. So this currently is an interesting technical level. It's a level that we are currently seeing that the bulls are protecting it. So the bears were not able to push below it yet. Looking at the daily data points, we are below all the moving averages, but you see here that there is obviously some kind of buying pressure at that level. Looking here at these other indicators, we are at interesting levels in terms of the PPO and also the RSI. The distance from the green 50-week, blue 100-week moving average, it's at a level that has formed lows in the past. Looking at daily data points here, the previous time we tested this RSI level was back here. You can see in this case you did get a counter trend rally. So we did still continue the downtrend, but we did get 15-ish% rally. So that's impressive. So let's here go to my notes. So the thing is that we are at horizontal support. That's the thing. I do think I will give the bulls a 6 on this one. The thing is that the key signal now is horizontal support. And so the bears have not broken it yet. They obviously do want to break that support level and turn it into resistance. But until that happens, this one is in the bulls' hands. They are holding the ball. They can score or they can lose the ball. So if we can compare it to like basketball, the bulls have a lot they can do. That doesn't mean they will. But we just have to accept that they currently do hold the ball because they were able to sort of stop the fall at that key support level. So let's look at the seasonality. So to the right here, over the last 5 years in green, 7 years in blue, and 10 years in red, we do see that the seasonality is weak, heading all the way into the 17th of November. So that's bearish. To the left, we do see that from August to December, the seasonality strengthens over the last 5 years. Looking at the last 10 years, it's messy because you do see that October is actually one of the weaker months. But November, December, January, February, and March and April are stronger. The last 20 years shows us that September, and we are still in September, It is one of the strongest months, but October is weak. Then the months after that are broadly, bullish. So I will only give the bulls a 2 here on seasonality because it's so messy. It's not that good that October is a messy, a weak month. So notwithstanding that, from November onward, usually we do see some overall strength. That is a bit too far into the future, and we just have to accept that the current seasonality is favorable to the bears. So let's look at the fundamentals, comparing Sweden with America. Year to date has almost lost twice what America has lost. Beta is slightly lower, 97 versus 99. And the yield is significantly higher, more than double, so that's nice. PE is slightly lower, but almost like negligibly lower. Holdings. So if you go further down, you can see that producer manufacturing is on top, then followed by finance. So those account for over 60%. America is more diversified. Producer manufacturing is a bit of a wonky category, so it's one of those categories where you can find a lot of things. I give the fundamentals a 1. The people that do look at fundamentals are somewhat more likely to pick Sweden over America, because there's better yield, slightly more value, but I think that on some of the other metrics, we just don't see a strong roar here for the fundamentals on Sweden. Next, we look at relative performance. So there's 81% long-term correlation with the S&P 500. We do have 95% here with the VGK, which is the European stock market ETF. Only 9% with natural gas futures, so very weak correlation. Minus 66% with the dollar index. Short-term correlations, 86% with S&P 500. Perfect almost with the Europe ETF. Minus 51% with natural gas. So yes, there is a negative correlation, but it's not like 100% or anything like that. A very strong negative correlation with the dollar index at minus 92-ish. We do, however, see that the correlation has differed also a bit over time. So the link it's a bit messy. But I think that the strongest correlation, obviously, is with the VGK, which is the European stock market ETF. So what happens with the VGK is going to have the biggest impact on Sweden. So here is the VGK. In this case as well, similar to what we saw with Sweden, this ETF has fallen down to something that could work as horizontal support. We do see that going way back. Many times this level has formed lows. This ETF, it does have bear markets and bull markets whenever it wants to. Here you have the bull market, bear market, bull, bear. They just happen in Europe. The horizontal support here is a bit weaker than what we saw with Sweden. Looking at the daily data points below all the moving averages. Looking here at these other indicators, RSI has fallen down to a level where it occasionally does form lows, but if we look back here in early of this year, we did go even lower on RSI, and during the C19 lockdown, much lower. The same thing with the PPOs. There's been many times when the current PPO, as an example, the green 50-week PPO has formed in like major lows, like back here in 2011. Like here, it was a very good time to turn bullish on Europe. But the problem is that during panic sell-offs, we do go much lower. Similar with the daily data points, you see here that RSI has fallen down to an interesting level. Previous time we had this level was down here, which resulted in a rather healthy 16% rally. We did go lower though, so this was just a temporary, momentary counter trend rally in the downtrend. But if you are like a short seller, a 16% rally is something you are going to feel. So if you are a short, there's a risk that we get a counter trend rally. If you are a bull, then maybe there's going to be some temporary upside. Here I am comparing Sweden with the Europe ETF. We keep coming back to horizontal support. That is the major theme in this video. Here again, this pair is at horizontal support. Meaning, more often than not, when Sweden has weakened this much against the Europe ETF, we usually see a turnaround. In terms of RSI, we do see that the low end of RSI here is very buyable in this pair. We aren't there really at this point. So we don't have like a squeaky clean trade. Looking here at the daily data points and getting some seasonality, we do see, unfortunately, that the seasonality for Sweden is weak into the 21st of November. So yeah, all the way into the 21st of November, Sweden usually underperforms the Europe ETF. So on relative performance, I give a -2 to the bears. So we end up with a 1.8 in favor of the bulls. We are at horizontal support. But it's very important to be aware that even though, yes, we are at horizontal support, meaning this is primarily an opportunity for the bulls, the bears, they obviously want this level to fail. Similar to when we have a stock is emerging from a low, or an ETF is emerging from the low and it heads towards a resistance level, the bears, they certainly want the resistance level to hold, while the bulls, they want to push through the resistance level. When we are touching such a resistance level, it makes perfect sense to say that, yes, the bears, they do have the advantage because we currently do see that it is a resistance level. So that's just the way it works. And so there are these two players to the market, and yes, the bulls have the primary opportunity here, so it makes more sense to be bullish than bearish, but this support will only work if there are more buyers than sellers. It's that simple. So the bulls, they need to perform. If they don't, then this support level will break and become resistance. So we do have some time left here, so let's have a bit of a look at stocks within the Sweden ETF. The first stock on the list is Noridia Airbank. Yeah, let's look at the listing in Stockholm. You do see that there is an ADR out there, but it's smartest to do the analysis on the most liquid listing. So here is Nordea Bank. It's a bit of a noisy chart because we are seeing something a bit interesting. So let me draw it in. You could make the case that this looks like a bit of a messy inverse head and shoulders. That is bullish. However, we are pushing into a territory where rallies have failed many times. So for Nordea, I would say that it's a bit messy. Next on the list is Investor AB. Certainly sounds very much financial sector-ish. So here are weekly data points. Yeah, I mean, the bears are just in control here. We are still quite some distance away from the red 200-week moving average, so it's not helping us. Yeah, this is just bearish, but let's look a bit at the RSI and the PPOs. So in terms of weekly RSI, there's been some precedents of these levels forming lows. If we go to the daily data points, yeah, it can form lows, but it's not. This is not like yeah, not much in terms of clean signals. So yeah, we have looked at Sweden, and we have look at some of the stocks within the Sweden ETF. The messy thing about the market is that we did see a very ugly sell-off. You can put on bearish trades even after an ugly sell-off, but the best time to put on a bearish trade is after a rally, because then the risk reward is just better. Similar to buying a security after a big rally. Yes, you can buy a stock after a big rally or an ETF, but there is a risk of a pullback. You don't get any of the previous gains. You start at zero. So I just really do not like to put on short positions on a big down day. I don't like to put on big bullish positions on a big up day either, because the risk reward is just simply not there. You literally just missed out on some trade. And this is one of the reasons why I'm such a huge advocate of having a long short portfolio, because that means that during these kinds of sell-offs, you would have some positions that then were beneficial. But yeah, whatever you do, of course, go to diamondarm.com to get more intel.